All righty, folks, we are going to have a conversation about can the commercial real estate crash, somewhere between 20 and 40% already. We're in the second inning. We're seeing office and multifamily being sold for significant discounts. Will that pain bleed over into single family homes? I've had this question a couple of times. I now see Crash Bros reaching for yet another excuse to call a single family home crash. So I thought I would step back from my opinion and ask somebody who's actually in the industry if they think that the commercial real estate pain that we are seeing, and frankly, he called, can lead into single family. Jonathan, we've been talking for a long time about bad deals, stupid assumptions, and the pain coming to syndicators, LPs, and GPs. But now, when you look at all of that, do you think it could have an impact on single family homes and cause a cascading crash there as well?
Um, so I would say unlikely. So I would say not, it is not a zero chance, but I think it's not likely. The reason I think it's not likely is because these are two very different markets, right? There are very different things going on in these markets. Um, you know, commercial borrowers or commercial syndicators and other commercial buyers and investors are taking a very kind of cold-hearted view of properties and are much more likely to walk away if it doesn't make sense anymore, hand the keys back to the bank, create a problem for banks. Um, you know, they stop overpaying when the music stops, right? Unlike, I think, single family house owners who really have different reasons for buying, other than the investment community, which owns a relatively small proportion of single family houses. I think the vast majority of people who buy single family houses live in them, and they have very different objectives for buying them. It's not about making money necessarily. So I and also the other thing too is that I think the lessons of the great financial crisis were actually learned in the single family market, and people are much better capitalized. They're much stronger borrowers. There just doesn't seem to me to be like this fear that, like, even if house prices do take a little bit of a beating, I don't think you're going to see people walking away from their houses, right? So um, it's I just don't see a crash being very likely. Now, where it could, what could happen? This is like the small caveat I have to
Mm-hmm.
this. If the commercial crash then really causes a banking crisis, then I could see a scenario in which banks just stop lending like altogether, right? Because they've got to rebuild their balance sheets. And in that case,
Mm-hmm.
they only lend, to the very, very strongest borrowers in the very, very best properties. And you see the whole housing market seize up because of that. But does that lead to a crash? No, I don't think it leads to a crash. I think it just leads to like the seizing up of the market,
Mm-hmm.
but it's not going to cause values to tank, right?
Yeah.
Just because lending seizes up for a while. It's not like the situation we had in the financial crisis where people were like seriously overextended, their payments shot up because they had these funky, these debt structures that, with teaser rates and all that kind of crap, or interest only
Mm-hmm.
for a couple of years. Like all this stuff is gone, right? So
Yeah.
I don't think that there's like this overhang of, you know, personal
Yeah, I think
mortgages ready to go kablooey that you had the last time, right?
yeah, so when I think about it, and again, I've been asked this question so many times, I kind of break it down into chunks. One of the talk tracks from the doomers and crash bros is, hey, all of this commercial pain that's coming, these foreclosures, these horrible sales, those are gonna, the talk track is, and again, but here's the talk track. That's gonna happen. That's gonna lead to a lot of layoffs. And I'm like, how do you get from one to another? It's clear you don't really understand what happens. So this is what happens in my opinion. Please correct me if I'm wrong. Like when we talk about what's going on, like there was a Chicago apartment building. It was on Lakeshore Drive that just got sold for a 40% discount. Those tenants in that building never knew that building was for sale. The only time they knew a new buyer is coming in was when they get a notice in the door to pay somebody else. this whole idea that Lakeshore Drive is going to be vacated and these people are going to be thrown on the street and it's going to be boarded up and all, it's nonsense. You talk about the office building in DC or Denver or anywhere else. Yes, they may be 30% vacant, but the other 70% are leased, and those lease payments will go to somebody else. It's not like single family homes in the GFC that when they
Yeah.
got foreclosed, they were boarded up. And all it's just not it's the debt that's horrible, not the structure.
Yeah. Not the underlying business, right? This is the same thing that you're seeing in a lot of multifamily where the assets are actually performing fine, right?
Mhm.
But the debt,
Is bad.
because of the people put A, too much leverage, and B, variable rate debt on it, that
Short term. Yep.
they can't meet their debt service, right?
Exactly.
So the buildings are distressed in the sense of not
The
being able to
debt
meet
is
the debt
distressed.
service, right?
Correct.
The debt is distressed, but on an operating basis, they're just fine,
It's
which
fine. Yep.
means that it will get sold in a short sale to
Yep.
somebody at an amount that makes sense given what the operating expenses of the building are, and that person will make money,
And the
right? So
tenants will never know.
the tenants will never know. And it's the same thing with the office buildings, right? The office buildings,
Exactly.
like, so they're 30% vacant, right? But that's not because 30% of those companies went out of business. They're just all working from home. So all those people are still employed, right? This is so, and yes, the building owners will take a haircut. The very wealthy people who own those buildings will
Yeah.
lose money, but they will be fine. Their
Yeah.
employees will mostly be fine. And it's just not going to create a cascade of,
Yeah, it's again, the idiots and doomers are trying to paint this picture where all this commercial pain is going to lead to layoffs. And again, as far as the structure, it's just they're not linked. Your second point is valid, but I would argue it's already happened. I actually brought this up with Lance Lambert at the time from Fortune, now at Resi Club.
Another person
After
to follow on LinkedIn, Lance Lambert,
yes,
by the way. Yes.
oh there you go. Um, Actually, I need to follow him on LinkedIn. I don't think I do. We talked about this the weekend after Silicon Valley Bank. That's how long this goes. I said, Lance, what's going to happen is these commercial banks are going to retreat. And I think you and I have had various conversations on this. And they're going to lend less and find reasons not only to not do new loans, but not refi old loans, which is happening. So your point about banks not lending, kind of at the commercial space, impacting single family, that is absolutely true. But what I would say is it's not net new. It's already been happening for a year. And then the last thing about single family is still something like 60% of the loans are bought by Fannie and Freddie. And banks, one of their profit engines is doing FHA and Fannie Mae loans and selling them to the government. So that's not going to stop.
And listen, and another point about the single family home market, which is very different from the commercial market, is the term of those loans. Right?
Correct.
So the fact is that people are in these 30-year mortgages for the most part, right? Probably minimum, you have some people with 15-year mortgages, right? But still,
Not many.
Most people are in a 30-year mortgage. So, and if they've bought even if they bought at the top of the market, right? They have a low interest rate and a 30-year mortgage.
Mm-hmm.
They're fine, right? There's no threat to them, right?
Let's not forget that 40% of single family homes are owned free and clear. There's that little caveat too. It's crazy.
Yeah, exactly, right? So you've got either free and clear or you've got people with very long dated debt, right? It's not like the commercial market where you have to refinance every 5 years, right? And you may have to refinance in a really bad environment.
Exactly.
This is one of the great things about the American housing market. Like in other countries, people have 5-year debt, right?
Yep.
5-year variable rate debt in Europe is very common, right?
Yeah, it's funny. I've actually communicated with some over there. They call it fixed rate debt. That's what they call it because that's what they've been conditioned to call it. I'm like, I'm sorry, a 5-year loan with a variable after that's not fixed rate, but okay.
Yeah.
It's funny.
But anyway, so this is just another reason why the housing market is on quite a solid footing. And I just don't see a crash. Yeah. And look, in spite of interest rates rising, all we've seen is supply of houses on the market drop, and that's keeping prices high because there's still intense competition.
Yeah, at the end of the day, I think you pointed at it. If banks truly locked up, it would just further hurt transactions.
Yeah.
Right. I think, depending on who you watch, Housing Wire, Resi Club, any of these folks, we're at roughly 500,000 of single family homes available. It's not a concern. 2019 was 1.1, 2011 or 12 was 2.3. I mean, until the supply is back to at least normal, it's not even a conversation. So
And
yeah, I don't
and
think
listen,
commercial impacts single family.
don't you think that also, I mean, if the bank sees up too, I think you're going to have a lot of private non-bank lenders step in to fill the void.
Oh, for sure.
And I think that also what you'll see is the home builders start to do self-financing, right? They will just
Oh
start
yeah.
selling
They'll
on,
issue some bonds and
yeah,
self-fund.
and they'll sell on terms, right? And
Yep.
so they'll just replace
Exactly.
the mortgage, right? So I just don't see, you know,
Yeah. They're
this
not
leading
connected.
to, yeah.
Yeah.
And if you said if 40% are owned free and clear, you're going to see that part of the market continue. Those people will
Yeah.
sell for
Seller
cash,
finances. Exactly.
sell for finance, buy for cash. I mean, it'll just keep rolling. So
Yeah. There you go, folks. You have it from somebody in the commercial game talking about how the commercial crash may or may not impact single family. If you don't know what his opinion is, go back and re-listen because he was very, very clear. Jonathan, where can people find you?
yeah, come find me on LinkedIn. That's where I hang out these days. If you'd like to have a conversation with me, I'm on there every day, posting, commenting. So swing on by, check out my profile, send me a connection request, and say you're from ORAT.
Yeah, came from ORAT. That way he'll accept. If you don't, there's a chance he won't. So came from ORAT. Thanks, buddy.